Portofino Technologies has secured FCA registration. This enhances its role in institutional crypto trading within the UK and for them is a strategic move towards compliance and growth. Today's episode is sponsored by Cake Wallet, where you can send, receive and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys, available today on iOS, macOS, Android and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody and a warm welcome again back to Enter Crypto with me, Chris Kenyon. Now in today's video we're going to be talking about a company called Portofino Technologies. They're being described in this article as a trailblazer in the cryptocurrency market making industry. And so as always guys, let's quickly jump straight into this article. Let's read through it, see what we can learn and then we'll comment after. So Portofino Technologies, a trailblazer in cryptocurrency market making, today announced its successful registration with the FCA, marking a significant milestone in its mission to facilitate institutional crypto trading in the UK. The company's registration as a crypto asset firm by the FCA empowers it to directly engage with major UK financial entities, reinforcing its commitment to compliance and market integrity. Since launching, Portofino Technologies has concentrated on developing its proprietary technology, enabling liquidity provision on major crypto exchanges, and with the FCA's endorsement, Portofino is poised to significantly expand its institutional client base, offering competitive pricing and deep liquidity across a vast array of tokens. This regulatory milestone places Portofino at the vanguard of the burgeoning institutional crypto market, signalling a new era of growth and opportunity. Alex Casimo, the co-founder and COO of Portofino Technologies, highlighted the importance of the FCA's approval in the company's strategy to augment its institutional clientele. The certification not only solidifies Portofino's presence in the UK and Switzerland, but also underscores its status as one of the most regulatory compliant market makers in the global cryptocurrency sector. Celine Armstrong, the General Counsel and Head of Compliance, emphasised the rigorous standards set by the FCA and Portofino's dedication to upholding these through strong compliance controls. Portofino Technologies, founded in 2021, has rapidly positioned itself at the heart of the crypto ecosystem with a focus on high-frequency trading infrastructure, and Portofino has attracted $50 million in investments from notable firms including Coat Management, Valar Ventures and Global Founders Capital. The FCA registration heralds a new chapter for Portofino, enabling it to forge ahead in its mission to connect institutional investors with the dynamic world of digital assets under a robust regulatory framework. The FCA's approval of Portofino Technologies as a crypto asset trading firm is more than a regulatory accomplishment. It is a testament to the company's unwavering dedication to regulatory compliance, risk management and market leadership. As the digital asset landscape continues to evolve, Portofino's strategic positioning and regulatory foresight will undoubtedly play a pivotal role in shaping the future of institutional crypto trading. Now, I know that many of you out there probably have never heard of Portofino Technologies, and that's because they mainly provide services for institutions and not people like me and you, which, you know, we're basically retail traders, if anything, or the majority of the people watching this video will be. And the difference is that institutional traders, or in this instance, institutional crypto traders, basically manage the trades or manage the accounts on exchanges for things like groups, like there could be pension funds, it could be mutual fund families, insurance companies, or even ETFs. And so it's not really something that your average man on the street or your average person that's into crypto would usually get information about. But the interesting thing about this particular article or this piece of news is the liquidity that this will bring in the UK. I mean, we're not talking, you know, BlackRock or something like that. Obviously, they bring huge amounts of liquidity to crypto, but this is just another step in the right direction where that liquidity just gets deeper and deeper and deeper. And it makes the asset class more stable. It makes the price less volatile, although it means, you know, with deeper liquidity or more money flowing into the, you know, crypto is going to obviously, the price is going to go up. But deeper liquidity means that it's easier to get in and it's easier to get out. And if it's easier to get in and it's easier to get out, then that is going to further adoption. Now, over the short term, it's retail that actually moves the needle moves the price in terms of volatility in the short term. But it's actually institutional investors or institutional traders that move it over the long term. And so the more money guys, they've got all the money. We think we've got the money. The institutions have all the money. When they get involved in something, or we get some kind of compliance with where the FCA have given a particular license out, they are actually, and they're allowed to now trade in that. They bring a wall of money with them. And so what that does for the price of Bitcoin or crypto in general is it makes the market less volatile, because they're not moving in and out every few minutes or every few hours. They're doing it over longer periods of time usually. And one of the added benefits to this, high liquidity, low volatile type of market is it can actually limit any risk of the retail trader, as well as themselves and even their competitors, experiencing slippage. And not only that, but the more money there is in a particular asset class, especially something as new as Bitcoin and crypto, the harder it is for the government to shut down, because they're going to face more resistance from not just people like us, the average person, but actually institutions, the big boys, are not going to be happy with a government that's, banning a particular asset that they're offering to people to buy and sell, because that's how they make the money. So actually, the more money that comes in and the more players involved, the harder it becomes, or I should say, the easier it becomes for us to be able to bully the government into doing what they should be doing, which is serving us and letting this go through. And that is one of the reasons that it is just now almost, I can't say it's impossible, but it's very, very difficult now for, say, the US government to actually stop Bitcoin or ban it, like China has done, because they've already approved it now. The SEC have approved it they've approved the ETF. You can buy it legally there. BlackRock are too big to now turn around and say, actually, that thing that we agreed that you could sell, now you can't. We're going to ban it now, even if it's for national security reasons, which I don't know why ever it would be. They may argue that it's a threat to the dollar and all kinds of stuff like that, but there's a long way to go before we get to that stage, if ever. But my point is that institutional money coming into the space is always a good thing. It almost brings no negatives with it. So that's the article I've got for you today, guys. As always, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.